also confirm it on YouTube?
Let me check. No, we're not. We're not actually.
I think we should be now. We should be now. Let me double check.
Yeah.
Yeah, we are. Hey guys. Hey
we are.
Chaitanya. Again, if you can, please confirm in the chat that you can see us, you can hear us. Ken should be here
Hello, everyone.
any moment. Yes, clearly. Thank you for the confirmation. Okay, let me just notify Discord Telegram community that we are live,
Of course.
and we can dive in.
Is Ken joining us today?
I'm sorry?
Is Ken going to join us today?
Yeah. He's going to. He's going to very soon. Should be here any moment. I'm just going to double check. And
all right, you have a nice background today, Jake.
Sorry for the delay, guys. We right now have a lot to do, building new studios. At the same time, we're going to open the community for the live stream traders, because I just can't answer all of your questions on Instagram, so I'm going to do it on the Discord community. So we're gonna send you a link that you can join the Discord, where we will be updating also on the markets, because Ken previously said that he gives you an idea or some sort of a setup, and then if something changes, he is not able to update you. So we are going to invite you all to the Discord community. Also me, I'll be sharing probably every day some charts that I'll be watching. So it's going to be beneficial at the same time for the giveaways. A lot of questions regarding the giveaways. Also, it's easier to connect with traders. Yeah, Ken is just in waiting room. Let me accept him. Perfect. Should be here. Hello, Ken. How are you doing?
Hey, Ken, how are you, man?
What's going on? I can't see anyone. Oh, here we go.
Can you?
Oh, there we go. I can see it. Whoa, Jake, set up.
Yeah, we building new studios. We've got two actually now. One in Prague and the second one here local. So a new podcast studio. That's why I started so late, because we just busy building.
Nice, man. Looks clean.
It's going to be awesome. It's going to be awesome.
Love that.
Anyway, how are you doing?
Yeah, I'm good. I'm good.
Oh, good.
Yeah, man. I can't complain.
Perfect.
It's bank holiday here in the UK.
Is it what?
It's bank holiday. You know, like a public holiday in the UK today.
Yeah.
So yeah, just been enjoying some family time today, and had some good lunch and stuff, and now we're here.
Okay.
Now we're here, baby. Yeah, man.
I was just saying to traders that I'm going to invite them today into this core community that I just created today for in case of updates, because last time you also said that when you was providing some sort of a setup and then something changed regarding the fundamentals and you no longer were interested in that setup, so probably we can all use it just to clarify.
Good idea.
And update.
Let's do it. And I am still waiting for my E8 account.
Oh yeah, it's gonna be delivered 5 minutes after the live stream.
Awesome.
It's gonna be there. Actually, I took 2 trades on that account already. I can then share it in the Discord, the number of the account, so guys, you know which account it is. I was basically trading the Australian dollar Japanese yen, which I said I'm going to. But lucky for me, I've closed the trade before we continue toward the upside, and then euro pound, which I'm going to probably speak about, as well as Australian dollar. We've got RBA minutes and monthly CPI numbers, so could be again a pretty volatile week for Aussie.
Yeah, man.
So I'm going to probably continue in my analysis because we are building, so I didn't do much, and I'm going to actually stop sharing the screen. I'm going to let you start as usually.
Oh, you let me start. Okay.
Yeah.
All right. All right. Let me just quickly give me a moment.
Stop sharing, and you should be able to do it now, hopefully.
Okay.
Also, guys, today is no e-signature giveaway. I need to pause on that because too much chaos, but it's going to be back. But the 48-hour evaluation challenge is still in. And We just need to figure out some sort of a counter, time counter on the EDX dashboard, so you know how much time you have. But as most of you guys know, it's 48 hours since you place your first trade. Let me see the chat because I haven't been able to. NQ. Can you be analyze NQ? That's probably Angel. Angel, are you going to analyze NQ?
Yeah, of course.
Yeah. Perfect. So yeah.
Okay.
Checking in. What's up? GBP USD looks spinner. So the 48-hour account, is that one step? Yeah, the King update. It's a E81, so one phase.
Share screen.
As always, perfect.
Girl, you're my angel. You're my darling angel. I always think to singing that when I see you, Angel.
That's the vibe, man. That's the vibe.
Oh, good. All right, guys. Just move this over a moment.
Okay, perfect. I can see your screen.
There we go. You can see my screen?
Yes.
Yes, sir.
Clearly.
Awesome. Okay. Guys, okay. Let's start off with dollar quickly. Okay. Now, this is crazy. So you would have seen the highlight of the week, really, when you look at was Friday. You know, that's where we had the biggest moves here. This big drop in the dollar. But you can see today we're already pairing this back. But this drop, for anyone who doesn't know, Jerome Powell did finally bow down to pressure. Okay. He essentially said that the key takeaway is he's definitely looking at potential September rate cut. And he basically said that, you know how inflation in the United States is still sticky? He basically said, in a nutshell, to be frank, is that we don't care where inflation is at the moment. We just see it as it's only temporarily higher because of tariffs. Okay, so they're disregarding basically where inflation's at right now. They just see it as temporary. And he noted about a slowdown or growth risk to the US economy. And basically that, the FOMC's policy right now is restrictive. So it's restricted enough or something. So basically that he in a nutshell, he is looking to cut rates in September. Okay. And why it's so drastic? Why it's so drastic is because the fact he said he's not paying attention to inflation anymore basically. So it's a complete change of policy stance from the FOMC, from the chair. So that's why dollar had such a big sell-off, right? And you can see we paired it back now and we're just sort of coming back in a range. Okay. And, I was surprised when I was doing my analysis yesterday. I was like, man, like we haven't done anything for a long time for the dollar. It's still in this awful range, really for many weeks now. 1, 2, 3, 4, 5, 6, 7. We've done nothing. Okay. This is why it's sort of choppy. And this bounce back is probably just a case of, profit taking. The move was big, but then, Jerome Powell only did what markets were pricing anyway. When you look at sort of rate cut bets, we were even ahead of Jerome Powell speaking. We were still about 80% probability that they were going to cut rates in September. And, we're at 84.2%. So it's like, okay, yeah, he did what markets were wanting. And now dollars is pulling back. It's old news. Done and dusted. I think we're not going to get any drastic breakouts until September. I said to you guys before, volume's very, very low right now. Okay. It's extremely low in the markets and we will get pick up next week when everyone gets back to the desks. I'm not sure it's going to be the catalyst for a big breakout. I don't know. Maybe it is. We have to wait for FOMC on the 17th of September. Anyway, I took some shorts today with both EU and GU and they're still running right now. I'll explain why. Look, for me, obviously we had the upside pressure. I thought, when we typically get big moves like we did on Friday with dollar, typically speaking, we should see some profit taking coming off the table. And the fact that it was, Jerome Powell's only done what the markets want. He hasn't done anything like spectacularly out of line of what the markets wanted. He's done what they wanted. So it's like, okay, you did what we wanted. That's it. You've made it clear that you're going to cut rates. Old news. The key for bigger moves comes with their communication at the actual decision. When they do cut by 25 basis points, like you guys saw with the RBNZ, like you saw with the RBA, they were dovish in terms of their outlook. We need to hear what Jerome Powell says, the FOMC say at that decision in a couple of weeks' time to really see some big moves. Okay. So I had that in my mind, which is why I was looking at these EU and GE shorts. So firstly, EU, this is a chunky area, this 117. Okay, massive area, rejection. You can see the numerous rejections there, like every time. And then I saw this sort of 4-hour closure on Friday, this bearish rejection follow through here at the open. So I was already thinking, okay, we're going to see some profit taken. We're going to see a shift in structure. So I was monitoring that. I took these shorts today up here. Reason being, I started to see, obviously you guys know I like structure. I started to see this starting. I observed this take some form, taking some form here. And I was thinking, yeah, this is entering structure here. So I waited for this rejection candle here, waited for the bearish engulfing below, and then took that trade just on this sort of lower high here. And I was expecting structure basically to continue, right? That's all it was. I was expecting a structure shift and that profit taking. So I've got those shorts running right now for Euro. In terms of targets, this is quite conservative. If you look on the daily, this is the next major daily zone. So I'm targeting down here. Okay. So that's what I'm looking for. A complete pair back of those moves. Because as I say, Jerome Powell hasn't done anything spectacular. Okay, he's just done what the markets wanted. That's why I'm expecting this to 100% pair back that move. And it's similar sort of price action with GU. Again, rejections here. This was a chunky zone in the early 135 territory. Saw similar price action here. Reversal candlestick. Obviously, we gapped lower. And you see we failing to break back to fill that gap. All those rejections. So for me, then it's starting to take form in structure. You can see sort of we're starting to structure to the downside, losing that upside momentum. And really now you can just see it's not as clean as Euro, but what we're doing now, if you look here, we've got a range here, which we're breaking out of. Okay. And that should drop, in my opinion. I think this is going to come all the way down. Again, just looking for those essentially to pair back this move. So I've got targets here at 134, just above 134, 134.15. All right. To come back into this pocket here. And it was sort of retest. I know my chart looks a bit messy at the moment, but we had a breakout this channel. And it's just sort of coming back there anyway. So a bit of activity for me, surprisingly, because I wasn't going to trade today because it's bank holiday in the UK. But it was just screaming to me to just take these shorts because of the reasons that I noted. So we've got those running right now. Let's see how those do. I don't know if anyone else, Jake, if you want to jump in. Or anyone, just before I carry on.
I mean, it kind of makes sense. It makes sense. I'm not going to trade it after Friday, probably. Gonna play it on a fence. But I was about to ask you, because I am thinking about trading the Euro Pound, and you are selling both, right? The Euro USD and Pound USD.
Yeah.
Or at least like your overview on both is short, right?
Yeah.
Yeah. What do you think from those two currencies, euro and pound, which in your opinion is the one that could be stronger in upcoming days, weeks?
Okay. I'm not going to look at the chart yet, but I'm going to give you my quick fundamental thoughts on this.
Okay.
If we think about euro right now, things are stable. Okay. We've seen, good freaking inflation being under control. Okay. ECB got inflation in check. They got it quickly. Inflation's at target for the ECB, which is good, stable. Last Thursday, we saw good PMIs. Look at the Eurozone PMIs. They continue to recover. This is great. Like we're very close to expansionary territory again. What a bounce back. Last year, we noted this was at like the low 40s. So Eurozone data is encouraging, whereas the UK, where it is a bit of a crisis really, because inflation in the UK is out of hand. When was it? Last Wednesday, CPI? 3.8%. That's berserk, where growth is still a little bit laggy. We're seeing a worsening in the UK labor market. It's worrying. So I haven't looked at the chart yet. So I would expect Euro GP to carry on to the upside, but it's not.
Well, today
on
is
the week,
but last week.
What's that? Sorry?
I mean, today not, but last week it was pretty decent.
Yeah, today not. Yeah, it was. I think I don't know what's going on here. I'm guessing markets are just thinking, look, the Bank of England, obviously they cut rates, didn't they, at their last decision? But maybe markets are thinking on a yield perspective here right now that these guys are not going to be cutting anytime soon because inflation's too high. So rates are going to remain higher in the UK. So there's that near-term thinking, but I would take that with a pinch of salt because of the economic sensitivity around the UK right now. So I think
exactly.
Do you know what I'm saying?
Yeah. I was about to ask you because this is the dilemma. I was buying Euro USD last week. Luckily for me, on Friday went up pretty drastically, so I made good profits. But then I would like to get on the longs, and now is the dilemma whenever the market's going to develop based on the economy factor. So euro strong because of the stability, pound weak because of the struggles, or then is going to market think that pound could be potentially, or especially Bank of England holding the rates for longer because of the inflation. So it's like 50-50 where market's going to stand at, if you know what
Yeah,
I mean.
yeah, yeah,
Yeah, probably we won't get that answer, but yeah, looking at the chart, we are now creating lower low on 1 hour time frame. Let me take a look at 4 hour, but still for me, kind of looks good to take longs on euro pound.
yeah,
Mm.
yeah, man.
Yeah, I'll be probably
Sick.
keeping my hands out of the Euro USD, GBP USD at least for today and tomorrow, and maybe on the Wednesday, might be
Yeah,
open to go
fair.
for it.
It's funny because yeah, no, that's fair, Jake. Definitely. Like really and truly, when you look at price action, like look at euro, look at that price action. It's
Yeah,
it's sickening. You know, on a weekly, it's just rangy, rangy,
yeah,
rangy, rangy. Yeah, there's just a lack of commitment right now. Someone just asked me, is Ken's move more fundamental driven or technical? I would say it's definitely more technical driven right now. As I explained, it's like a case of profit taking from those overcooked moves, and it's a case of Powell just did what the markets wanted. So it's not like, whoa, he completely surprised us, sort of thing. I mean, in a nutshell, it kind of he did because obviously the market shat itself in terms of dollar. But then it's like once you digested that, okay, it's old news now. We wanted him to give us this positioning for a rate cut, you know, on to the next thing.
yeah.
So it was more, I guess, more technical driven for me, just profit taking aspect of things.
Yeah,
Yeah.
and maybe the second question that I would have for you, because I would like to get into analysis of Australian. I don't know if you've planned to, but I would like to just take it off my back.
Yeah.
So
Yeah. Please do.
basically, Australian dollar this week, we are having the RBA minutes. So from the last monetary policy decision, we're going to get the statement, and at the same time, that's happening on Tuesday, and on Wednesday we've got monthly CPI. So what I believe is going to happen what I believe is going to happen is that based on a projection, maybe the on Tuesday on that statement, the Australian dollar may get a little bit of bullish momentum because we know bullocks in past few weeks, months, how she is for some reason hawkish. But then, if inflation, which is expected to go to 2.3 from 1.9, which is quite low, then I think if that's not going to get, if the 2.3 is not going to be met, I think that the Australian dollar is going to fall down. Yeah, so probably on the meeting minutes,
Hmm.
bullish bullish dollar, Australian dollar, and then if we're going to get anything lower than 2.3 on Wednesday, I'll be probably selling Australian dollar hard. What do you think
Fair.
about that and about the Australian dollar situation?
Fair. I mean, I definitely agree with you. Everything literally you've said. I'm not obviously a fan of price action right now. Is very horrendous. I mean, it's for the weekly
That's
for a
fair.
very long time. Look at it; it's crazy. Um,
Yeah.
but I think yeah, we could be. We definitely. I would look at this to the downside. I think this could really shit a brick. Excuse my friend. Sorry. Especially
No problem.
how these guys are going to be picking up their pace of their rate cuts. There is obviously growth. They mentioned obviously potential risks to China, shockwaves to China downside. So I think, yeah, this is going to be an underperformer. AUD and NZD, I think, are going to be big underperformers to come as we head towards the later stages of this year.
Yeah.
So yeah, I'm in line with you. I think this could
Yeah,
really fall when it does
I
fall.
was just checking the forecasting on the last monetary policy decision, especially regarding the inflation, and that's why we have the consensus back to 2.3 instead of stabilizing around the 2%. So maybe that statement could be a little bit hawkish. That's the only thing I'm afraid of. But then, if not, and if the inflation again goes anywhere below 2.3 I think the euro Australian dollar could be a good option as well as the Swiss franc. Am I right? Yes, Swiss franc and Australian dollar could go down again. The price action doesn't look bad because we created a new low. I'm going to share the charts then.
Yeah,
And
go
again,
Jake.
the Australian dollar Japanese yen, which I took a short, but then it reversed, closed it. But now we are at a very interesting 96 level. I can even share the chart now if you don't mind, and then I'll
Yeah,
just
please
continue.
do. Please share.
Okay. Let's share the screen. So, trading view. So basically, that's the Australian dollar Japanese yen. And once I share the account on the Discord, you'll see I was taking shorts here, the 30 pips. And I was saying that last week that I'll be expecting correction. I didn't expect that we're going to reverse back, but now we reached the 96 on Australian dollar Japanese yen, which does look very good, to be honest. We didn't create new high, we created new low. From this point to the low should be the golden zone again. At the same time, the zone is pretty much strong resistance. So if actually we're going to get on Tuesday bullish momentum for the Australian dollar, and then on Wednesday we're going to get a lower inflation print, this would be probably my first pick that I'll go with. So I'll be taking those shorts. At the same time, Euro Australian dollar, we have beautiful correction, still pretty bullish market, in my opinion, except last few days, the Friday, of course. So reached, again, we're below 1.80, but I think this still holds the support where we are right now. I can even extend this zone. And of course, so I want to forget Australian dollar, Swiss franc. Those would be my three pairs that, if the scenario that I just said is going to play out, those would be the three pairs where I would be looking for shorts on Australian dollar. Because Australian dollar, Swiss franc, particularly good. Just making a correction. I don't have an analysis, as I told you so many times. I don't do analysis on Swiss franc because, to me, I'm just looking for weak currencies to sell against Swiss franc. So I think we're at a good point. Maybe even this zone where we are right now, probably this one, a little bit higher though, but it's 0.20, 0.5025. Yeah, if we get there with the Tuesday's bullish momentum, I'll be happy to sell over here. Yeah, so that's at least for me the Australian dollar. Didn't analyze much else as we were working on the studio, but I'll update you more on the Discord.
Nice.
I'm going to pass it back to you, and I'm going to try to find more charts that I can share with traders.
Okie dokie.
By the way, do you have any analysis on those three currency pairs? With the Australian dollar, either Euro Australian dollar, Australian dollar Swiss franc, or then the Australian dollar Japanese yen?
Let me. Yeah, I mean, let me share my screen again. Oh.
Yeah, sure. And also, someone just said in the chat that we do have Tokyo CPI and Japanese unemployment data, industrial production, I think as well, and retail sale. So it's going to be also, if the numbers are going to exceed the consensus, it's going to be also pretty volatile week for Japanese yen. So we'll see.
Definitely. I think, guys, I'll go over gold in a moment. Lowell, hope I said that right, Lowell.
Yeah.
Can you guys see my screen? Just double checking.
Yeah, we can.
Awesome. Yeah, so just quickly, just on that Japanese yen.
Yeah.
So I think one thing that's going to be really interesting, maybe later on this year, is going to be that divergence narrowing. Okay, we are getting closer towards the BOJ. Obviously, we're talking about BOJ rate hikes in 2026. They're going to happen in 2026, but we could get that first one this year still, later on this year. And then we could have a focus on the interest rate differential. So everyone else is cutting their rates now. So rates are coming down, but in Japan, rates are going up. So that differential, that interest rate differential is narrowing. That deficit, that gap is narrowing, excuse me. So that provides JPY an edge, and that could be a big edge to come in 2026, especially if we finally get, because all these economists and everybody, and I mean even myself, last year, 2024, late 2024, I said there's going to be, we're going to have that economic bust, the recession this year. We haven't seen it yet. Obviously, it's just a case of licking your finger and putting it in the air because no one truly knows. No one can call that to the date, really. It's just unless you're a super freak. So at some point when we get that economic downturn, that's going to be favorable for yen as well, those safe haven flows. So yen will have a serious chunky edge. It's just a matter of when, okay? Not if, it's when. But anyway, back to your point, Jake, with Aussie yen. On the weekly, it's just really rangy for me at the moment. Daily, I mean, God, it's not really my cup of tea. I'm just following structure right now, and obviously it is to the downside. Okay, with these lower highs, lower lows. Obviously, we're just waiting for this new lower high. Potentially, we can get it at this 96 area here. We've got this block here. I think we could get some potential rejections anywhere in this proximity from where we're at now, 95.80 up towards sort of 96.00 ish, and then potential resumption to the downside for a lower low. I think that's all I can say at the moment. I think
that's fair. That's fair.
And I think there's no reason as to why we can't slip into, if I'm just looking left here, probably into, well, it probably breached those lows at 94.50. And then we'd be looking at 94.00, in my opinion. Where would you look at targets?
The 96 would be a pretty nice level to go for it. If the targets, no, I would enter on the 96 and then targeting probably back 95.
Yeah, I think that's spot on. That could be a really nice trade, to be honest. I mean, I think 95 is quite conservative, and I think that could be a really nice. Yeah, I think that's a high probability trade for me.
We'll see.
Let's see.
Guys, just so you know, I was just checking the Tokyo CPI and the retail sales, which I'll be watching the most from Japanese yen, are on Friday. Or depends where you live, either Thursday night or Friday morning. But I'll be watching for higher CPI and higher retail sales data if that's going to happen, because expected is 1.8 on retail sales and 2.5 on the Tokyo CPI. If we're going to get anything higher than that, it just confirms that the rate hike can come sooner. So just wanted to add that on.
Yeah, 100, Jake. I you know what? Just on the point of Aussie yen entered the yen. Yeah, let's see how that CPI comes out. I think if currencies are to underperform versus the yen as well, AUD and NZD pairs, what I just said about that divergence, AUD and NZD could be freaking good ones for the foreseeable future, because obviously these guys have left the doors open to cuts, RBNZ and RBA. Obviously, we saw that last week before. So with that gap narrowing, those could be great pairs because these guys are going to be cutting more. They have the downside as well with the Chinese slowdown. We're still waiting for more Chinese stimulus. China are really slowing down right now, but no one's talking about it because everyone's been focused on tariffs. Everyone's been focused on Trump. But at some point, we're going to focus on this Chinese slowdown. Remember, I was screaming about it before, where prices are dropping in China. Chinese economy needs stimulus, but it hasn't got it yet. Okay, it hasn't got all this more stimulus. So the slowdown in China is going to hurt AUD and NZD as well. So I think Aussie yen, NZD yen are great potential shorts, okay, to come. Look at this monthly at the moment, by the way. Obviously, structure's bearish, but look at this huge monthly engulfing. Interesting. There's no reason why we can't see big drops in these, to be honest.
As you mentioned it, the New Zealand dollar maybe looks a little bit better than the Australian dollar, especially after last week. So yeah, both look pretty awesome, but more bearish looks the New Zealand dollar against Japanese yen at this moment.
Yeah, man. Yeah, and like structure looking clean right now. I think we're just going to get a continuation of this new lower high print and a nice drop. So I like it. I like that.
Yeah.
Other than that, I'll just quickly go over gold because people were asking about gold.
Yeah, sure.
It's a tricky one, gold, because we're still in this range. Gold is obviously at the moment is best for scalpers, people scalping, not intraday trading, because it's just not great for a swing trader at present. Look, we found support down here again. You see where we're just in this narrowing triangular structure, this pennant. We're just caught in this big pennant at present, and that's where we bounced again. We did have a break of structure, which was nice on Friday. Obviously, that big bearish dollar move broke out of this structure with these lower highs, lower lows. And now what's quite interesting is that we're getting comfortable again at this 33, 65, 70 area. Guys know I like my flags. You know, we've had a breakout with flag here, and now obviously got this retested its zone. So long as this holds, you can see here when you look left, we should have a move into 3.4. Okay, that's naturally where we're going to be magnetized to. Bar any bit of manipulation or a bit of short-lived sort of spikes here, we should continue to trend to the upside. Again, it just is a little bit sensitive because of see the dollar's pulling back at the moment. But as I've said before, there's no reason as to why both dollar and gold can't rise together in tandem. But right now, trend is your friend. Structure is clearly to the upside. We're obviously in this process of printing a higher high, and dips are being bought. So yeah, if you ask me, I'd expect this to head into 3,400 until structure proves me otherwise. We do have, excuse me, I'm just analyzing this in real time, by the way. Obviously, we're failing to break this down at the moment. If you look sort of 33.75, 33.80. So here's a bit of a top here. If that fails to break that down and we end up coming back here, back towards these lows at 33.62-ish, then obviously this runs risk of a big pullback all the way back down to 33.40. Okay, or maybe lower.
Maybe just taking liquidity on the higher high.
Yeah.
So we can. I mean, yeah, I agree with you that this is not the best situation for swing traders. I mean, range traders made millions on these moves because gold is going just sideways for a couple of months. So, yeah, both scenarios are very possible. What was the level that you said if we're going to break above the current high?
Yeah, I'd say we're going to go to 3,400 up here.
Yeah, 34. Yeah,
this would be the next zone.
That looks pretty good. Okay.
So let's see, but I mean, it's not encouraging at this moment in time because of this double top. It's a bit of a double top, isn't it? Really, 1-2 neckline here, 33.63. So if that does give way, we'll end up like I'm expecting a drop with euro and GU. We'll expect a pair back of that move. Be a good over 50% pair back. So yeah, that looks probable, to be honest. Right now, I just talked myself out of the idea of longs, but yeah, potential downside here. Let's see, okay. Babies. That's it from my side.
Yeah, I'm looking if I have anything else, but probably I will have one more pair. Let me just finalize the analysis. So, Angel, would you mind to step in and provide traders with the indexes analysis till I figure out the last pair that I'm going to provide analysis with?
Yeah, of course.
Perfect.
Let me do that right away. I really like the trade that Ken took this morning because it's sweeping the Asian high and then it's just confirming it with the structure. It's really, really clean. That's the Ken model. I took one similar trade today. I'm going to show you guys. Let me share the screen real quick. Window. This is the window. All right, I think you guys can see my screen now. I hope everyone had a beautiful weekend. This is a trade that I took today, again on our trading platform, the Day Market X, really clean, really trader friendly. It shows here the realized profit and loss for today. It was around almost 1% because I was risking almost 0.5% on the trade. It was a 1 to 2.48. All right, this was a clean trade. It was really, really mechanical in my opinion, in the way I trade, because I really like this model. If you guys look, it came from sell side to buy side, right? But these levels are not other than London low, Asian low, and London high and Asian high. If you guys look, we swept Asian low, we swept London low, and then we confirm that we are going to take the trader to the opposite liquidity. Then we just need to wait, of course, for the right hours to trade, and always, looking for the opposite liquidity as target. In this case, you could take a target here on the London high or the Asian high, right? It was really, really clean today. Yeah, of course, I'll be explaining the gaps right in a bit because the trade today was actually based on a 4-hour gap. This is just a confirmation for the trade because that's the model that I like to trade, at least for the execution. But let me just go to the daily time frame real quick to show you guys what I'm looking right now as for the NASDAQ. As you see, last week, we take the high, right? So we can say this is a new leg in price. This is a higher low, and this is a new higher high, right? So you tend to, of course, use the Fibonacci to see where the price is retracing. I would like to trade. I wanted to trade lower last week, but it didn't happen. The thing that I was looking for taking sells back into this low, it didn't happen. So right now we are just trading here, right? As you can see, price retrace it back into the discount. In this case, we respected the 60% and the 70% retracement on the daily time frame, right? We have a reaction from this level. So we can safely say this could be a new retracement for the price to step out, and it provides a new all-time high, right? If we go to the 4-hour, as you guys can see, take a look at the way the price respects with candles the 70% level. There's some sort of rejection here. Of course, the wick can go just beyond the level, but the candles are actually rejecting this price, are respecting this price, right? So that's what's pretty much that I was looking at today, because I wanted to trade lower, but the price didn't actually trade it right away into the gap to trade lower. So we just pretty much got stuck here accumulating, and then we were running straight up. So for today, we have this 4-hour gap right here. And you guys see this gap, this is space between the wicks and this big bullish candle here. So that's pretty much the gap that I like to mark out, right? So that's where I'm going to wait for the confirmations between the sessions in the highs and lows. So this was the gap today. Actually, if we use a Fibonacci on this gap, we can see we're closer to the 50% of that gap. So we were respecting like the high part of the gap. And then when we traded into the gap, we swept Asian low, we swept London low, we rejected, we break the structure to the upside, and the price went for the opposite liquidity. This is a clean trade. This is what would you like to trade every day if you're trading the indexes, right? So this was very clean. So as for tomorrow on NASDAQ, I'm going to be looking for more longs, right? So unless, of course, we disrespect this 4-hour gap, I'm going to be looking for longs, right? So let's say tomorrow the price trades lower and then we close below this gap, then it's going to change the years to look for sells again into the lows. But right now we're bullish, right? I would like to see a retracement back into this gap here to keep looking higher, maybe taking this high, and then of course taking it and placing a new all-time high. All right, the trade today was very simple. It's following Ken model. Yeah, so that's for the NASDAQ. Let me check the gap real quick. Bullish in NASDAQ here. Yep, so pretty much bullish. I'm gonna take a look to SP 500. It's pretty much the same. This one actually traded a little bit higher. As you guys can see here, this was a gap, right? This is a gap. As you can see, the spaces between this week, and this bear candle right here, right? So this is the gap. See the way that the price is disrespecting this gap. So we are closing above the gap. So pretty much this can show you that the order flow, the structure right now is bullish. So this is nice, because if the price is going to close like this for tomorrow, we're going to leave this new gap right here, right? So it looks really interesting, because if tomorrow then we have this low here, which will be the previous daily low. So tomorrow we'll have a confirmation for the price to trade lower, sweep the previous daily low, tap into this daily gap, and then trade back higher to take the highs. So this one looks really clean to me. Of course, if this happens with Asian low, London low, it gives more confluence to take this trade. I really wanted to see a little bit deeper retracement today into this gap, but the sessions just confirmed the trade as for today. So yeah, that's pretty much for SP 500. If we use a Fibonacci here, on this new leg, you'll see that we're still a little bit on premium price to actually look for longs. So it will be nice if we can have a little bit more deeper retracement back into the discount area to look for longs into this gap here. So this is pretty much the waiting game that I've been looking for tomorrow. We don't have many news this week. I think only on Thursday and Friday. So you got to be really, really patient. You got to take the best setups that you see. And of course, if it's not obvious, do not take them, guys. Don't take those trades. For Dow, US 30, as you guys can see, we had actually a retracement into the discount last week. I was waiting for a little bit deeper retracement, maybe 60%, 70%. We actually traded just in the 50%, and the price ran straight up. If you guys look at this 50% retracement, and you can match this 50% retracement with this gap here, right? You guys see the gap. You see, this is the big bullish candle. We have these spaces between the wicks. So this is the gap, 50% retracement. The price just tap into it and then run straight up, right? It's going to be the same bias for the Dow Jones tomorrow. I'll be looking for longs once we swipe the previous daily low that we're going to leave here, because this is about to create a new gap in price. So for now, I'm going to be bullish until I'm proven wrong, of course. Do you see something that actually confirms maybe the sells, but this looks good to look for longs, this whole area on the daily time frame for the Dow Jones. If we use a Fibonacci here on the 4-hour, let me use a Fibonacci real quick so you guys can see. So we can expect maybe anything just below the 50% retracement. I'm going to be looking what happens. So it's going to be the same. If the price overnight just get here and we see, Asian session, and then we manipulate the Asian low, and then we can just trade higher. All right. So that's for the Dow Jones. All right. Yesterday in Q price action showing accumulation before any session distribution to liquidity. Sandeep, if you look at today price action, let me just share NASA real quick. Today price action, let me use M5. All right, so you see this level here. This is pre-market, right? Because market opens here at 9:30. As you can see, we have some sort of accumulation here. And you take a look, the price is some sort of consolidating on this range. We manipulate the range at market open, right? And we're not just only manipulating that range, we're manipulating the London low, the Asian low, and then we're distributing higher, right? This was for market. So accumulation, manipulation, and distribution. Very much for today on NASDAQ. All right, so that's pretty much for me today, guys.
Perfect. Thank you so much for your analysis. I think that I'm already getting into it, the way you trade indexes. Hopefully, I'll learn it in next few weeks. Would like to add it into my portfolio again.
Yeah, we'll love to see some trade of you guys on the indexes.
Yeah.
From you and Ken, of course. So with the EA account, I'm slightly above break even. I took 2 losses on the first trades that I took, and then this one. So I'll be just showing you guys how the account goes. Of course, it's hard because I have to trade my accounts and the trading account as well. So I'm pretty much switching between accounts. But I'll be just, I'll find my way to actually, keep it up with that account.
Okay. What trade did you take on that account, on the E8 account?
Oh, I took 2 losses last week, the ones that I showed, and this long here today, which nice. Would, yeah.
This one looks good. This one looks good. Okay, perfect. Angel, I think you also would be probably interested in joining the Discord, just if any updates regarding indexes, where we can basically let our community know what's happening, in case you would
Oh, yeah,
like
of
to
course.
just update your statement from the live streams. So, guys, I'm going to send you the links shortly after, probably maybe even rather say tomorrow, so you don't wait for it today. And yeah, I was about to give you one more analysis, but I'll probably keep it for the Discord server because it's not finished yet. I need to also go through some data. So it's going to be all for me today. Ken also said that he covered what he wanted. So I think we can keep today's session a little bit shorter. Let me just double check on the live chat if there's someone with the question for live streams. No, the Discord is for anyone. Anyone. We just want to have a space with the community where we can update from our live streams. Also, I'll be providing some sort of an overview, maybe every morning or every night, depends where I'll find the time, but it's going to be more frequent. And also for the giveaway, because I've got a full Instagram of messages, so I would like to have it on one place. So can we find it? Yeah, I'm going to, mate. I'm going to just send the link into my Instagram stories once it's done, completed, which is going to be probably tomorrow's morning. And is there something else? Is today price NQ? No, I think we're good to go. DJ, yeah, yeah. I think we're good to go. Anything, Kenna? Just
No,
wanted
no, no. All
to.
good.
Yeah, okay, perfect. So thank you guys, Angel Can, for sharing your analysis. Also, thank you guys for being here, for participating in the live stream. We appreciate you and placing those comments, your question into chat. I will again leave the comment below the video with the winners of 48-hour evaluation challenge. So that's as for the giveaway, and I'll see you on the Wednesdays one again. Is there?
All
Yeah.
right. Catch you later,
All right.
guys. Take care.
See you guys.
Perfect.
Let's up.
See you soon.